What's up guys, my name is Kenta, and in today's video we're going to talk about risk management. Alright, so risk management. Like I said in the last video, risk management is the #1 key to capital preservation, and you definitely should be practicing risk management if you want to become a consistently profitable trader. So what I did is I made a short presentation to really simplify and break down to a system that you can follow to practice risk management. So Risk Management 101 by me, Kenta Goba. So what is risk management? Well, according to Google's dictionary or online, risk management in business is the forecasting and evaluation of financial risks together with the identification of procedures to avoid or minimize their impact. Now, really, that's just a fancy way to say that risk management is a way to figure out what your risk is based on what you're dealing with, which markets you're dealing with, what trading setups you're dealing with, to minimize and not take huge losses while you're trading, right? So that's what risk management is. We need to practice that so we don't lose our accounts, right? How do we practice risk management? So what I did was I broke it down into 4 simple steps. Step number 1, predefine your risk. So if you have a $100,000 account, let's just say, as an example, you want to risk, generally you want to risk 1 to 2%. That's just the rule of thumb. You don't want to, have one trade below your entire account or below, 30% of your account, 40% of your account. You want to be able to take a few losses and be able to bounce back from them. So predefine your risk. Some people might want to risk less, some people might want to risk more, but figure that out for you. So step 1, predefine your risk. Step 2, decide where your entry and your stop loss level is going to be. So no matter what market you're in, based on your trading plan, trading strategy, your edge, figure out what your entry would be and what level would invalidate your trade. So you need those 2 levels. That's step number 2. Step number 3, this is the most important step, and that's why I have it in red here. So stop if you're not going to do this step. You got to calculate your risk based on those levels. So based on, those 2 levels that you have, calculate your risk. And I'll show you how we do that in the next slide. And then step number 4, if you are confident in your trade and you've done all the other steps, then you need to fully accept your risk and then enter the trade with the calculated lot size from step number 3. So 4 easy steps, don't overlook them. Step number 1, predefine your risk. Step number 2, decide where the entry and the stop loss level is going to be. Step number 3, calculate your risk based on those levels. And step number 4, fully accept the risk and then enter the trade with that calculated lot size. All right, guys. So I just have some examples of risk calculators that I've used and I still use. So these are some free options, basically a position size calculator that you could, look up on babypips.com or myfxbook.com. They both work basically the same here. You would figure out what currency you're using. I use USD. The account balance, so if you have a $100,000 account, you put that there. Risk percentage, put 1%, and then stop loss level, you would put how many pips you're risking. So figure out what those 2 levels are, and then calculate how many pips that is, and you can enter that there, and then choose the currency pair, and then it'll ask you to enter the ask price, right? So you would enter wherever your entry level is, you would put that there and calculate it. It would give you your lot size that you would enter for that trade. Now, there are a couple paid options that are great. Riskcalculator.app is one that I use most frequently. I use it on my Dell laptop. I'm just having issues with my Apple Mac M1, getting parallels and getting all that set up. So I just use it on my other laptop. But basically, it's a really easy way to calculate your risk. You can actually just drag and drop the levels based on the trade, and no matter where you drag the stop loss level, as long as you have the percent of risk or cash risk, it will always be that same amount of risk, and it'll calculate what lot size to enter for you. You can enter as a market order with these two buttons, or you can enter with a limit, or buy stop order, I guess, with a pending order. More so a buy limit, sorry, sell limit and buy limit with a pending order. And then it also gives you options to close partials, stop loss to break even, close custom, so whatever, 25, 75%, whatever you enter in the settings, and then close 50%, close half, right? So this is just a app that you connect to your MT4, MT5, whatever platform you're using, and it's a great option. It's $9.99 a month, so like I said, it's a paid option, but $10 is definitely worth saving you tons of money, losing trades, not risking or managing your risk, right? And then magic keys, this is basically the same, serves the same thing, same functions, except that this is a physical calculator that you'll have in front of you. And if you like that aspect, I know a lot of professional traders that use magic keys. This is a great option if you have the money that you can or you can afford the 165 plus the taxes and shipping and handling. So let's just say $200 if you can afford that, then this is a great option to use, right? So let me just show you an example of how to use the risk calculators. So let's just use the baby pips free version real quick. This is a trade that I took on UJ last night. So 2-to-1. So let's get the amount of pips here. So that's my stop loss level. So it would go there, about 6.5 pips. So I put that here, 6.5. Risk percentage, I'm going to put 1%, and then account balance, I'm going to put 100,000. So, and we're going to use UJ. The ask price is, this one, it's 143,655. 143,655. Calculate. So based on that 6.5 pip stop loss, you would be entering 22.1 lots if you wanted to risk that 1%, so $1,000 on that $100,000 account. And yeah, it's just easy as that. You would do that for your trades. Like I said, especially if you're a swing trader or a position trader, it only takes a few seconds to do it, and you can just enter it and not have to worry about how much you're actually risking on that trade. I calculate, I figure out all my positions on TradingView, as you can see, and then I would enter them on my MacBook, or my PC laptop here. So I'll show you also an example. Unfortunately, I can't show you on the screen what the risk calculator looks like, but it would basically be in the corner screen right here. And I'm going to enter a pending order for a short and a long, just so you can see that I'm risking $1,000 each time and make it really easy for you to see. So I'm gonna put an entry there, and I'm gonna put this as a short. So I'm going to enter that. So basically, I put in a pending order. This is where my entry level would be. It would get me in here. My risk, as you can see, is 997.12. So basically $1,000 right there. And then my take profit would be down here. Obviously you can adjust that. So that would be a 2-to-1 right there, 2R trade. Yeah, so I'll delete that and just show you how easy it is if you want to just switch to a pending long order real quick. So pending order, put that down here, and then enter. Very simple. Let's see. Okay, I really put it down there. So that would be my entry, and then as you can see, $1,000 risk, $1,499, and then that would be my take profit. So obviously you can just take profit. I would say if you decided your stop loss, just leave your stop loss. That would be the level that would invalidate your trade, not the specific example, but that would, you want your risk to be the same basically. So that just simplifies it for you. So I'm gonna cancel that, right? And let's go back to the presentation. Okay, so why do we practice risk management? Well, seems kind of silly at this point in the video, right? But we practice risk management to protect our accounts from blowing up and to protect our psychology, right? AKA losing all of your trading money and losing your mind. I say that from experience. You know, I don't think I've actually fully lost my mind, but you know, in those moments of losing a lot of my trading money, you know, those were very emotional moments that I definitely don't ever want to relive. So, you know, you have to practice risk management. Now, if you're beginning to trade, you know, you might need to experience a couple losses, some bigger losses to really feel that and to understand that this is something that you definitely need to practice. But if you're smart enough to just do it and don't think, just, you know, from the beginning, just start practicing risk management. It'll definitely save you a lot of headache, and it'll save you from losing, you know, money and losing your mind, right? So I have some example, or I have a video here of some examples of people not managing their risk and losing a ton of money and sort of losing their mind. So I thought it'd be fun to watch this.
Top 5 day trading fails and meltdowns. Number 5. Oh shit.
Okay, I just launched some AMRN right here off of this support right here. Bounced up a little bit past this 50 period moving average. Good thing this good chance this thing could go green, so you know, maybe make a nice little chunk along with 1,000 shares. Let's see what happens with this thing. Okay, come on, just keep on moving. Shit, come on, man.
Hopefully he has his stop loss set somewhere down here and he's calculated his risk, so it doesn't seem like it. He's sort of freaking out. You know, obviously that was a bit of a move there that going against him. So let's see.
Well, fuck, it's got some support right here, so, you know, maybe it'll hang on to this 16 area, bounce back up. Come on. Fuck! Oh, shit!
That was obviously a very dramatic spike, right? So, you know, first thing I think of is, especially if it's like crypto. It's not crypto, but if it was, to like think rug pull. But, you know, like I said, if you were calculating your risk, you have your stop loss set, your stop loss would have definitely got disrespected there, but it would have got you out at some point. Maybe you would have, you know, lost 4 or 5 times, you know, your risk, but better than losing your entire trading account. You can bounce back from 5-6% loss, but you can't really, I mean, you can, but it's hard to bounce back from like a 50-60% loss, right? So, you know, hopefully he had his stop loss level.
I just lost $1,500.
He just lost $1,500.
Oh shit! Oh.
I mean, $1,500. You know, it you know, it's money for sure, but you can make back your $1,500. You know, with some hard work, you can do it.
No.
Number 4. Bam bam. Everything happens so fast.
All right, man. How are you doing this week?
Man, it's okay. It's better than last week. I lose some, but it's fine. But man, today is a really, really beautiful day. My strategy go perfectly. Let me explain a important rule about, you know, trading, day trading, a penny stock. Everything bam bam happens so fast. You got to focus on this. It's like a minute.
What's that?
Oh, that's a chat for with professional to make sure, I mean, we're in the same page, you know what I mean? But anyway, let me show you this strategy. As you can see, this stock, I've been looking at this for a long time. It tried to go above $1, but when it did, boom, skyrocket jump. See, right now it's about
boom, skyrocket
and
jump.
It even go above $2. That means this stock at the end of this week or maybe today, it have chance to go to $5. So what I do is I put about 20 grand of share, about $2 right here. This one I got.
So he put 20 grand of shares up in this level. That doesn't seem like a smart move.
in, I believe, yeah, $2.
Wait, you put 20,000 shares in?
20,000 share of $2, so that's about $40,000.
40,000.
40,000. Man, why would you put that much in there?
Man, that's all I got, man. I gotta say, because you know, my grandfather say, you want to be rich, you want to get successful, you gotta take a risk sometime. And my grandfather,
There's some truth there. You definitely have to take risks to become successful, for sure.
never lose. So what I do
Grandfather
is,
doesn't
A lot of
lose.
money, man.
so when it's about to hit $4 or $5, that's when I'm gonna make a big money. And
$4 or $5 is when I'm gonna make big money.
cannot be happening to me.
That's funny. What? This is definitely staged. I mean, look at
Man,
this
you
guy.
need to be
What is
watching
going
that
on
in
here?
case
He's got a
something
bunch
happens.
of beat
No, man, just-
pills and
Hold on a second.
some
All right, man.
whatever
So-
kitchen knives and stuff. What is this trading setup all about, man? What
What's
is
it
this?
say?
It cannot be. It can't happening.
What is it? Well, turn
You
your
say-
other monitor.
Yeah, this is definitely staged. I mean, look at that. The candle was just that one candle, and then 30 seconds later, there's like, I don't know, 15 minutes worth of candles. I don't know what 1 minute chart, whatever this is.
Oh, man, you need to be.
Oh my! Hold on.
Let me zoom in.
I did not do the stop loss. I was too
He
excited
said
to
I
do the
didn't
stop
do
loss.
the stop loss.
What is happening to me?
You have to do the stop loss, bro. You have to do the stop loss. It's a non-negotiable, at least in my terms. You know, you can't get excited and not use a stop loss. I've been there too many times, man, where I didn't use a stop loss and things turned against me, and I didn't have the willpower to exit the trade. And you know, you got to know what your psychology is all about. You know, so use a stop loss. I'm gonna skip to the next video. Oh, this one is just straight gambling. Let's go to this one.
Life's money.
Lost my wife's money.
I'm in here trying to make some money. My wife said I can't take the losses I had yesterday, which I basically I basically lost everything we had. We took out a loan today. We got $10,000, so I'm gonna try and turn that into a victory for us.
Yeah, I'm just gonna stop this here. I mean, he lost all of his money the day before, and he took out a loan for $10,000. He obviously doesn't know what he's doing. He's not managing his risk, because he would have lost everything, you know, in one day. You know, he was managing his risk, and then he took out a loan to basically gamble more. So I don't know. This one might also be a you know, staged or whatever. So let's just skip to the next one here.
Number 1, Wolf of Main Street.
The Wolf of Main
There's
Street.
no way the stock is above 120 as soon as the
Yeah,
earnings
look
are
at
out.
this guy.
All of those I'm going to be selling, and then it's going to be like a snowball effect, you know? Wait a minute, did I see one? No, wrong way! Wrong way. No. Okay, that's good. That's good. Yes!
Hey man, his emotions are all over the place
No,
already.
what the fuck? It's going up now!
His voice.
No! No!
I mean, man, where was your risk management, man? What is this? What is this?
No! No!
$29,000? 33? Come on, man.
Shut up!
Hey man,
Oh my god.
it doesn't matter how confident you are in a trade.
No!
You gotta practice
No!
risk management, so this doesn't.
No!
Oh my god.
No! No!
Okay, I'm gonna stop that. Obviously, he's not practicing risk management. Way over his head, clearly, and yeah, he's losing his mind. So there you go, perfect example of what I'm talking about. I'm gonna exit this. I'll put the link in the description. So if you want to watch that all the way through, get a good laugh, you can do that. But really, to sum everything all up, you know, I just really want you guys to be practicing risk management, especially, you know, beginner traders out there. It's crucial that you practice risk management from the beginning. Don't go through what I went through and learning the hard way. Lost a lot of money in the beginning, you know, not managing my risk, not using stop losses, just a whole bunch of things that, you know, really kind of worked against, you know, my trading account, and obviously, you know, my trading account, but also my psychology. So you have to, you know, start building that confidence back up. You don't want to really have to do that. Just start from the beginning, practice proper risk management. And how you do that, like I said, the 4 steps, right? So predefine your risk. Step number 2, decide entry and stop loss level. Step number 3, calculate your risk based on those levels. And step number 4, fully accept your risk and then enter with the calculated lot size, right? So if you enjoyed this video, please subscribe. I really appreciate it. Go ahead and smash the like button too. And, you know, in the comment section below, you know, let me know what kind of situations you've been in, you know, using risk management. If it's saved your account, obviously it would. But or you can just hit me up on Instagram, shoot me a DM, and let's connect. So really appreciate you guys. Hope you guys are, you know, having a very successful trading journey. And just remember, patience is key. All right, guys, have a good one. Peace.